Good. Let's start with the most important thing. Paul, how is my audio? I mean, we fiddled with the microphone last week, so I just want to make sure it's okay.
Yeah, no, your audio is perfect. Paul's audio is a bit muffled. I don't know what microphone you're using.
Shall I put on off the AirPods or?
If you can use a different microphone, the microphone in the AirPods tend to suppress the audio.
So are we ready?
I'm ready.
Yes. Ready.
All right.
Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Paul Bruckberger and Ville. This is Fintech Daydreaming.
Hello and welcome to another episode of Fintech Daydreaming. My name is Ville. I'm here with you. I'm going to be your host for this episode. But as always, I cannot do this without my good friend and co-host, Paul Bruckberger. So, Paul, we survived the Nordic Fintech Summit, mostly, I think. So what did you like? How did you like it?
I thought it was fantastic. I mean, we already did the summary of it and told people what we thought. Still a little bit disappointed I didn't get to do that stage dive, but maybe we can line that up for sometime in the future. Some special event where I can do a stage dive and you can get your experience of watching me slap onto the concrete floor or something similar. But no, I looking forward to doing it again next year.
Yeah, indeed.
Simple.
And the reason I asked, of course, because yes, we did the summary, but that summary was before we had the after party and the karaoke. So, I mean, if there's something you want to share about that, that's another story, but maybe not for this episode. Because
I can share that I can't sing. I won't say anything more than that.
Yes, indeed. And since this is the week when we're recording, which is after the Eurovision Song Contest, we could spend like an hour just talking about who should have won the contest, because Finland, of course, practically won it, but that's another story as well. But we're not here to talk about Eurovision, we are here to talk about fintech. And as always, we have a fantastic guest lined up for you today. One of my favorite topics we're going to be talking about, which is the machine economy and IoT, I think. But before we get to all of that goodness, let's get to our guest as well. So Paul, good to meet you. How are you doing today?
Thanks, Ville. Thanks, Paul, for having me. Pretty good to be here. Looking forward to an exciting episode.
Yeah, so tell our audience, who are you? What do you do?
I'm Paul. I'm one of the two co-CEOs at Links4 and also one of the founder of Links4. We focus on pay-per-use financing for manufacturing equipment. All
right. So how did you end up where you are today? I mean, a little bit of your background.
So I started my career I think 8 years ago or something like that in the IoT space. Spent there a couple of years, started as the junior project manager, basically, ended up in the partnership team there, where I built cooperation between machine builders and an IoT platform where we just collected different IoT data, analyze that, and give back the information how efficient you have used the equipment in your factory. After that, I spent a little bit more than 2.5 years at Red Bull in the energy drink company from Austria. I spent also there this time in the partnership team. And after this time, I thought it's time to do something by myself. Also do something with data, use something what I've learned at the very beginning from the IT space. And then I came up with the idea to link or to use IoT data not only for internal purpose like how to increase your productivity, but also use the data for financial products. And that was basically a starting point of Links4. Obviously, there was a lot of discussion going on. It was not that on point from the very beginning. But then we learned that on the one hand, traditional banks and leasing companies and also insurance companies, they don't have access to IT data, and they also don't know what this exactly is. And then we build a tech platform to collect the data, but also be now a platform where we can finance everything by ourselves. So basically, we ended up to being a leasing company, just focusing on pay-per-use. So this is kind of my story so far. And now we're currently in the growth phase of the company.
All right. It's really good to have this fintech founders as our guests. Even though the name of our podcast is Fintech Daydreaming, I sometimes feel that we talk to a lot of bankers and a lot of technology vendors that are on the larger side of the spectrum. So it's really nice to talk to these earlier stage fintechs, even though you've been around for a while now, I think. But before we get to talk more about Links4, what is your value proposition and what are your customers doing and all of that goodness, we do have a tradition in the show, which is that we ask our guests to tell a fintech related joke to kind of get us into the mood of the conversation a little bit. So I dare to ask if you have a joke to share with us today.
So I have one with me. Obviously, it will not be good, and also I'm not creative. So, but I think it's fintech. It's obviously it plays the technology an important part, and that's why I asked ChatGPT for a fintech show, and the answer was basically the joke. Why did a banker quit his job? Because he lost interest. There are many more out there, but I think that's the worst one I found.
Yes, I think I'm pretty sure we've been doing the podcast now for more than 3 years now, and I think we have some version of that joke before, but I'm sure our audience has forgotten. So I think that was perfectly in line what we expect the jokes to be.
Well, it's very good recycling, right? We're being very efficient here and looking after the environment.
Yeah, exactly. I mean, ESG is another big,
Exactly.
theme for us. So I think obviously on the joke side as well, not only is it garbage, it's also recycled.
Yeah, maybe ChatGPT also listen to your podcast, and that's why they have the joke already.
I like the sound of that. So we could say that we're the top ranked listened to podcast by ChatGPT.
Also another thing we learned in the Nordic Fintech Summit, by the way, we are the largest Nordic Fintech podcast. By the way, dear listener, if you know something different, please let us know. But as far as we are concerned, we are the largest Nordic Fintech podcast. But good to get that out of the way. I think we're all warmed up for the actual conversation. And like I mentioned before, this is one of the most fascinating combinations of technologies that I can think of, and this is really about how do we combine machine data, like you mentioned, Paul, in your introduction, to financial services, and Links4 is right in the middle of that, as we heard. But how did you kind of land from the background of having IoT data available, and then how did you come up with the idea of using that for financing or equipment financing, and why did you think that what is your value proposition, your unique value proposition when it comes to this world, and why do you think you will be successful as Links4 in this equipment finance?
Yeah, I think it's so, I mean, obviously, my idea was basically we have all the data is available. So there are ways to capture data, but they're just used internally. So they use it and say, okay, how much downtime I have, how can I increase my productivity, and just use it for internal purpose. Because also the technology wasn't ready to bring data from one company to another one in a safe and secure way and also trustful way. And my idea was basically, okay, it's interesting data, know how you can collect the data, but also how you can use and interpret the data and how you can use it internally. And I think that is super interesting information for external companies which don't have access to that. And then we started to speak to different people. So we spoke to different insurance companies, to banks, leasing companies, and they say, okay, might be interesting, could be good, but it's always a challenge because how can we trust the data? How can we collect the data? Who helped me to read the data and all this stuff? And that was kind of the starting point to say, okay, let's build a platform which can securely and trustful collect data in a way that it's comparable. It doesn't matter if it's a forklift, an injection molding machine, or a bottling machine. So it's 1 hour is always in 1 hour, so you can compare it, and then bring that in a secure way to a cloud infrastructure, so that a third party can use it for risk management, for pricing, and also for invoicing purpose, without having the fear that that the data are not correct. Yeah, and this was kind of the starting idea, and then pretty quickly we learned also that not only the data is the issue, but also the flexibility. So when you look now at traditional financial products like a credit or a lease product, you always have to pay the same repayment rate. Doesn't matter if you use the machine or if you don't use it at all. And obviously with pay-per-use, this will end this will change, because in some months you maybe use the machine more, and in other days you will use it less. So basically there will be always a different invoice which needs to be created. And it's a simple process actually to create a flexible invoice based on the data, but the leasing companies and the banks are having their old systems where it's pretty hard to put in now a new source and basically send out different invoices every month. And then obviously there's the whole collateral process aligned with that as well. And then we learned, okay, not only the data is an issue, but also the flexibility, and then also who's taking over the usage risk. So the risk that there's less usage than what is actually planned. And then also obviously banks, that they have their rules but they have to follow, and it's pretty hard for them to bring in or onboard new products and also get their head around the risk, because they don't have the data, and they also don't understand the data in that detail. And that was the decision we made. Okay, we're not only building a tech company which is providing data, but we're also building a fintech, basically, having the data tech infrastructure, but also the financial capabilities to buy the machines and then to lease it to different machine operators. And we basically, or we are in fact a leasing company. We're just focusing on pay-per-use, which is a little bit different than traditional leases.
So just to understand from give me a little bit more clarity. I think Ville, you've looked into this a lot more than I have, so this is quite new to me. So for the next 20 minutes, you're going to get a lot of idiot questions from me, but hopefully some of my listeners or our listeners will be happy for that. Are you just a matchmaker? Are you sitting there in the middle between the consumer or the companies using the equipment and then the equipment manufacturing companies? Or do you actually buy the equipment and then put it onto your books and then lease it on a paid to your consumption-based model to the end consumer?
Yeah, it's the second way you have described it. So we buy the machines from the equipment manufacturers, from the OEMs, and then we lease it on the pay-per-use basis to the machine operators. So we're not a matchmaker. We are actually a fully leasing company. So everything works exactly the same when you would traditionally finance the machine, with the major difference that you only pay back when you actually use the machine.
So that must mean that you actually have a fairly high upfront investment to be able to buy that equipment. And that also means that you need to somehow do a certain amount of calculations to ensure that you don't basically overcommit on this equipment. So how do you ensure that you basically don't go out of business?
So obviously we have different refinancing sources. One, for example, is an own build-up equipment fund, which we use for refinancing purposes. There's basically where this cash is coming from, where we can pay upfront 100% of the purchase price to the machine builder. And then obviously what is important to measure and to estimate the plant utilization correctly and to build in the correct or the right or the appropriate risk margin, basically. So what we have done, we have analyzed from over, I think, 2,500 machines, over 40 million data points from different machines over 4 or 5 years. Where we also have this kind of COVID dip in and everything. And there we learned pretty good. Okay, how does an automotive company, for example, in Sweden normally, or in Finland, normally uses, I don't know, an punching machine or injection molding machine. And then we also know how's injection molding machine used in the automotive industry in Germany, or across Europe, or in Asia, or in the US or North America. And I think that's super important information to have. And I think that's also one of our big advantage that we have, because we have so many historic data, what we can use for pricing, to understand the risk, and also to make sure that the risk is actually not a best guess. It's actually a calculated risk.
So now I've got just one last question.
Yeah.
Then you can take over right here, right? But sometimes it's interesting to get lessons learned and experiences. So I mean, have you ever got that calculation wrong? Have you ever sort of sat back and gone, oh, bollocks, we absolutely messed this one up, or or have you always managed to get it right?
And I mean, until now we have been maybe lucky, or the data are super correct, or our risk models are perfect. Yeah. But we haven't made a big mistake until now. So I think everything is until now in the range what we have planned. Our portfolio performs at the moment at 101%. So it's actually a little bit of overusage. Yeah. This can be obviously a sign that we are maybe too conservative. But I think yeah, we're doing in that way currently a good job, and we haven't had any fail until now.
Fantastic.
Okay, so let's break down the process a little bit. So we're just trying to understand all sides of what you do and what is your unique value in that value chain. So starting from the equipment itself. So let's say you find an equipment manufacturer that would like to get these equipment leased out and have them off their balance sheet. I think that's the usual prerequisite for an equipment manufacturer that would be interested in your services. Then what happens next? So do you go and install sensors into the equipment? Do you go and inspect the equipment? And then how do you get the data flowing first? And then we can go into the financial balance sheet side of things.
Yeah, I think with the data side, it's actually not a huge issue anymore to get access to the data, because there was this kind of whole industry 4.0 initiative the last couple of years, and a lot of OEMs and also machine operators have done a brilliant job, because they have their own condition monitoring and systems in place, which basically I've started my career at the very beginning. So what was more our goal to build a platform which can be connected to all the different industrial protocols. So you need to understand that every machine has their own kind of mini PC, and this PC speaks a certain language, so-called industrial protocols, and there are many of that available. And we needed to find a way that our platform can speak all these different languages to collect the data from the machine PC, or so-called PLC actually. And that was more the big thing, because we don't need to install any hardware at any machine anymore. We just want to align with the machine manufacturer or with the equipment operator. How can we get access to this kind of protocol, which is already pre-installed and which can already read all the data and store it internally in their PLC. And as soon as this is once aligned, it's a purely software thing. we can use it for all the different equipment or for the same equipment types from one single machine manufacturer. So this is then super scalable, but you just need to do once this kind of setup, and this is how it's done.
So do you ask for historical data from new customers that you onboard? So do you need like to have a lot of history of how this equipment has been used in that specific manufacturer, or do you rely completely on the data sets that you have already collected yourselves?
Yeah. No, we always ask for historic data because it's always better to have more data available. The historic data, what we have, I think, are a good guidance. When we don't have any data, we can use that one as well, but we also use it for benchmarking. So what kind of planned usage the equipment operator assumes for the next couple of years, and then we can benchmark it within our data. Can it be correct or not? Yeah. But also we ask for the historic data if any are available, and then we can also do the benchmarking, see how's the fluctuation, seasonality, and so on, which is obviously important to know.
Okay, so a bit of a side question, but with great data becomes great responsibility, right? So is there any problems with data protection or privacy in these questions? I would imagine that many of this equipment is being used historically by multiple customers who might have requirements to protect their usage data. Is this a problem in your space or not?
I would say it's not a problem, but it's an topic what you openly need to discuss, and you need the right infrastructure and the right security system built up so that it's sure that this data cannot be lent at any competitors or on the internet. I think that's super important because these companies are super keen on that data, and I think the big value what we bring in with the pay-per-use finance, from the very beginning, it's clear that we need to get access to the data. So there's no discussion about that. It's more like, what kind of way, except my security team, my cybersecurity team, that I can share the data in a certain way. And I think this is the topic what needs to be addressed. But until now, we always found a solution. So we haven't lost a deal or a project because of the IoT connectivity until now.
But I'm assuming from a data perspective, really, what you're picking up is hours of usage, right? So how many hours has this engine been running for, or how many hours has this equipment been operational, rather than any other data points? So is there really that much risk around that data getting out?
So we're not only collecting the operating hours or the produced units, we also track different things, like when you think about the bottling machine, you also think how much water consumption the bottling machine has and how many bottles they have produced, so that you can build correlation models behind that and check if this can be correct, whatever they have reported. So is it critically? I think it depends on the industry. When you think about the automotive industry, even if a competitor would know how many operating hours you have around the factory, or how many pieces you have, or how many cars you have produced, I think this is super critical. So you really need to take care.
Okay, so moving on to the next stage in the process. So now you have secured the historical data, you have secured that you're able to read the data from the machines, you have made the agreement with the equipment manufacturer, and then now it's there on your balance sheet. How do you create the pricing for the pay-per-use models that you're going to be doing? So, I mean, you have this, I would suppose, some kind of an AI algorithm or risk modeling that allows you to land at a certain pricing. Maybe, I mean, we talked a lot about already about this. You use the historical data, you use the patterns. Do you use any other external data sources? So, for example, that if you know that the equipment is going to be used in a certain region in certain conditions, so weather conditions, do you use those kind of data points to be smarter with the predictions, or do you rely on higher level of consumption data?
So I think obviously we just do the same pricing like like you would do with traditional lease. We also need to do all the risk analysis, make sure that we have a risk spread or credit risk spread on that, and then basically we need to add the usage risk spread, and this is basically calculated through the algorithm that we have developed. But also what you mentioned, we also take under consideration which country the machine is used and so on. So this also is part of the entire pricing engine.
Okay, and that lands you at a pricing level which you think will be profitable for you over a certain amount of time. Do you make equipment deals then? Do you make these contracts like just pay as you go and then drop it, or is it more like over several years? What's the framing that you usually use?
Normally you have a certain minimum contract duration, so you agree on that upfront, because this kind of contract duration will also be impact how much you pay per operating hours, for example, and that's basically then fixed, but you can choose between, I don't know, 3 years and 10 years, whatever you think is the best solution for this equipment.
Okay, and to be clear, the users of the equipment, so basically the customers that pay you, these are also businesses, so this is B2B, not B2C.
Yes, sorry to mention, I haven't mentioned that, so we only do B2B.
Yeah.
Okay. It's normally factories, global automotive supplying companies, or food and beverage companies, something like that.
And there I was hoping I could lease my next lawnmower from you, but obviously not.
No, unfortunately not.
Is that something that you might be looking into in the future or not?
I think it's too small, to be honest.
Okay.
So you really need, I think it's too small for PPUs,
Okay.
at least for us.
Okay.
But I am wondering, I mean, we're talking about very large industrial equipment here. At some point in time, you have to decommission this. So it becomes your responsibility to decommission it, to take it apart, to remove it from the customers. And then what do you do with it?
So I think that's one risk what we don't take. And also what we don't like is the secondary market risk. We approach it that way that the machine operator has a purchase option, so they can buy the equipment at the end of the contract duration, or we have the option to sell it back to certain dealers or to certain machine manufacturers who take it back, and then they basically refurbish it and then sell it in the secondary market. Okay,
so you don't end up yourselves, trying to sell off old equipment on... Yeah, I mean, actually, our office is too small. Even we are now moving to our 4-time bigger office, but don't have place for such large machines here.
We don't see any tractors behind you or something.
Not now.
You're gonna need a bigger garage for those things. But okay, let me actually take a step back before we go to the decommissioning phase. So the data streams that you use to calculate the amount of usage, this usually creates a natural question, is that the users of this equipment are suddenly incentivized to fake the data. So they might want to try to disable the sensors, so they might want to mess around with how much the equipment is actually being used. So how reliant are you on the actual individual sensor data? How do you make sure that this faking of data streams doesn't happen, because it has a direct correlation into the amount that these companies pay for using this equipment?
I think what you just described is maybe, I know, the larger companies. You have the purchase department, the finance department, who are basically deciding which kind of machines are going with pay-per-use, and then you have the operational business, which are actually using the machine. So basically, often the operational business, they don't really know how the machine has been financed. So I think there's a low probability that they actually really think now, okay, I'll use more this machine instead of this one because I only paid that for as a usage. So I think that's a low probability. But nevertheless, obviously we are asking quite a lot ourselves these questions and how we can tackle it. I think we obviously built some things in our contract, so some clauses to protect ourselves from that. But also from a technical point of view, we build up the system in two ways to secure that. And the first is, as I mentioned, we go directly to the PLC. That means if they fake the data, the sensors, which are already built in with or will be delivered with the machine, they will fake their own reporting systems as well. So when someone is using the data internally, they will also reporting the wrong data. So that's one thing. And then the second is, and the short example, which I have explained before, was the correlation. So we check, for example, how many bottles have been filled in, but we also check how many liter of water was rushing through the machine. And then we see, they have 1,000 liters of water, but they only reported 1 bottle of water. And then obviously we know, okay, there is kind of a mismatch. And then we would dig into that, where this is coming from. And then obviously this is just a super simple example. And obviously there are huger and bigger risk models behind that to check the correlations. And this is also where the struct data are coming in, or is coming in to help us to build these correlations.
Another thing that IoT data is being used for and has been for quite some time is, predictive maintenance and predicting of failures and those sort of things. Do you guys also get involved in the maintenance and upkeep of this equipment? Because in some ways that will help to increase your revenue stream, right?
We're not really involved in that. Mainly the pay-per-use equipments are normally also have a full service contract with the OEM, with the machine manufacturer, but all the stuff with predictive maintenance, uptime guarantees and so, this is more something like what we cannot really influence. And also when you build up predictive maintenance models, you really need to have a deep understanding of the industry, of the equipment itself. And this is something where we don't see ourselves at the moment.
But I mean, so one of the things I'm thinking about there is if a piece of equipment is not being maintained and it starts breaking often, that actually affects your revenue stream because you're being paid on the usage of it if it can't be used. So there has to be some element of correlation there between, the maintenance and upkeep and of that machine versus what you're doing, at least for your own benefit.
Yeah, so I mean, from a legal point of view, the machine operators needs to do the maintenance on a regulated basis. But obviously if they don't do it, and we see that they don't do it, and because and then we cannot reach our targets. We have our rights basically to protect ourselves. But this again coming to the point, the equipment user, they're not interested to having a machine which is not maintenance, that is not working. They actually want to use the machine because if they use it, they also make revenues and produce some product. So the core interest of them is not trying to sneak around to have a new machine, which I've got maybe for low money or lower money that I would directly purchase it. It's more like, okay, how can I optimize my internal KPIs, like the balance sheet effect? How can I survive seasonalities? How can I maybe also increase uptimes when there is the OEM also involved? So I think it's more like these things, not like how can I try to save some euros here.
So I want to round off the discussion by talking about the future. So let's try to look at the 5 to 10 year landscape. But before we go there, I do want to round off this conversation that we had about the life cycle of the products. How do you handle the problems? And speaking about the problems in this landscape, rather than asking what are the biggest problems, let me ask it this way: if you would have a magic wand, I think we done this a couple of times in other episodes as well. If you had a magic wand and you were able to make one big problem disappear from your daily business in this pay-per-use financing, what would that one thing be and why?
It's a good question. Spontaneously, I would see two fields actually. One is on the secondary market risk side. So not all OEMs are prepared to take back machines and push it or refurbish it and then sell it in the secondary market as a used machine. I think that's a big issue. I think it's also, but it's super critical to solve that, not only for pay-per-use reasons, but it's even more important for ESG reasons. So because when a machine is not used anymore from one equipment operator, you can give it back, and the same machine gets a second life, which is super important to kickstart the circular economy. And I think this is an issue which I would love to solve, because it has two aspects. It has a good impact on ourselves, on the risk side, but also has a good impact on the environment. So I think this would be definitely something. And then the second larger issue we believe is something like that we have more standards across all countries in terms of regulatories, so that you don't have all these different local laws, obviously. I think people are working with that, but I think this can be maybe not in daily business, but when you want to enter new markets, this can be a pain sometimes.
So now we've described the process more or less from end to end, and concluding with these things that we look to improve in the ecosystem. But the one thing that I've kind of been wondering about when I hear the way you work is that how much of that actually can you automate, and how much is still manual work? And I would believe that smaller fintechs like yourselves, edge would be to have large parts of that automated, so you're able to be very efficient, more efficient than traditional leasing companies, for example. Yeah. So if you could kind of have overall picture, how much are you doing automated, and how much do you still need to do on manual basis?
Yeah, I think it's a super important topic. So most of our process needs to be automated and digital, because otherwise we will not be able to survive and outcompete traditional companies. I would say in terms of processing, maybe 90%, something like that, is automated, because what we need to do once is to align on the IoT interface, which is manual work once per equipment or per equipment type. And then when there is the same equipment coming in for a new client, someone just needs to add it to the platform, which is easy work, but someone has to do it manually, and it's normally done by the OEM itself. So I think that's the manual work, and then we are throughout the entire process. When the machine is onboarded, we get the data, we have the invoicing. Before closing the contract, we have a digital credit assessment, we have a digital KYC and anti-money laundering checks. And then obviously we have this automatic risk models, which gives us insights when something is going wrong or not in the right direction. And then you have basically then also the signature and everything is digital. And then at the end of the contract duration, there's where again the manual work starts again. So the contract ends, and then we get the notification the lessee is taking over the equipment or not. If yes, everything is ready to go, you just sign it and it's done. And then if not, we just need to manually make use of our rights to sell the equipment to different dealers or machine manufacturers. I think so. At the very beginning, when it comes to the IT connectivity, the first time it's manual work, and at the very end, when the contract ends. So, but in between, everything is automated.
That's a super high percentage. I mean, do you see like in 5 to 10 years that it will be almost fully automated? Can you become almost like an entirely digital company, almost autonomous?
I mean, I hope so, but I think it would be a challenge because at the end of the process, someone needs to make a decision. The decision is not made by us. We need to wait for the input. So this is something what we can maybe make automated, so they can give us a yes or no, and then the platform is working on with that input automatically and trigger the different events. But I think, yeah, will be a challenge, but definitely the goal is to have more or less everything automated and streamlined, because this will leverage our efficiency pretty much.
So I mean, that's maybe a good segue to talk about a little bit about the future. And I'm really now want to talk about like 10 years ahead, 5 years ahead. What's the kind of art of possible in this space? In my mind, when I hear pay-per-use, and I know Paul wanted to get a lawnmower with a pay-per-use contract, but maybe something that is maybe a little bit closer, cars, for instance. So if I, for example, go to any of the car companies here in the Nordics, and I want to make a contract, and I want to make that leasing contract online, they only offer me options for regular leasing companies, but and leasing options with fixed prices per month, the only parameter being almost like how much you want to drive and how long do you want to keep it. But the is this model of pay-per-use something that we could see in the longer term future, in a way that I could just go on a website or pick up a mobile application and say that this is the car that I want, and then the next thing that happens is that after I sign the contract, at the day when this thing is manufactured, it could just drive itself to my door and say, here I am, and then I could just pay for the amount that I actually use that car. Is this something that will happen in the future, or is your view of the longer term future something different in this pay-per-use world?
I think definitely. So the trend is definitely there to go there. I don't know if it will happen 5 or 10 years, maybe longer. I don't know. But I think it's the way to go, because I mean, we are now focused exclusively on B2B customers, but I think there will be companies, and maybe also ourselves, to enter the B2C sector and market. I think this is a huge market, obviously. And as you just mentioned, it's a super inspiring vision to have everything online. The car is driving fully automatic to your house, and you just add your credit card or your cryptocurrency or whatever, and then you just use it. So I think there will be challenges for sure, because when you enter the B2C market, it has different challenges, like we have discussed before, with, you know, customers always try to optimize their cash, basically, and try to be sneaky and find ways and loopholes. But I think when you crack that one once, I think it's a huge market, and it's definitely possible to grow there and to see not only for cars, but there are many things in the B2C sector what would be interesting for a pay-per-use model.
I actually think that model already exists, Ville. If I remember correctly, I think in Sweden, for instance, I think it's BMW. They have in Stockholm this app, and you pay per use. They have their cars parked a little bit like the bloody scooters that are destroying all of our sidewalks here. Similar sort of system with the small BMWs in Stockholm, as an example.
But that's a bit different, because that's like short-term rental. So again, what I'd like to have is, like, if I go to, let's use a Nordic example. Like if I would like to get a new Volvo Polestar, maybe is a good example of a Nordic electric car company. So if I would like to get a brand new Polestar for me to use, and then for the privilege for me to use it, I'm okay to pay a small monthly fee, but mostly I would like to pay on how do I drive, basically. Not only how much do I drive, but maybe even if I drive safely, I don't do sudden braking. All of this can be measured by the car. Then if that could be even baked into the pricing, I think that could even have like a more societal benefit of people being more responsible in the way they use this equipment. Is that something that is in your view of thinking as well, as at least as part of the value chain, Paul?
Yeah, I believe definitely. I mean, as Paul mentioned before, like in the car sharing models, they sometimes already measure how fast you brake or anything like that, or how hard you brake, and they also took that under consideration. That they block you, at least in Austria, they sometimes block you then to use the service, because it's not efficient how you use their cars, and they don't want to get destroyed basically too fast, their cars. So I think that's definitely the way to go and use also the data what will be collected then. And
Isn't that
also, sorry?
Sorry, I didn't mean to interrupt you there, Paul. Yeah.
In other words, I just want to mention one example on pay-per-use in the car sector, which already exists. I think I'm not sure if it's BMW or some other German car manufacturer, but they launched their seat heating pay-per-use model. So basically, you can buy the car. You don't need to pay upfront the seat heating. It's already implemented, and only if you use it, you can basically go to the app and say, okay, now I want to have it for 10 minutes or whatever, and then you just pay for that 10 minutes and not for, you don't have the upfront investment, which is, I mean, seat heating is maybe just a small part of the entire car, but it's like they think about that model, also the larger brands, and I think there will be a shift to that, definitely.
Yeah, I think it is BMW. But back to what you were saying, Ville, isn't that what Tesla's doing with their insurances in the US? You can actually get an insurance, Tesla insurance, based upon how you drive. So you pay based on when you're driving and how you're driving. I think there's been lots of discussions around the fact that Tesla puts up their insurance quite substantially if you drive during the night, but night to them is anything from about 9 o'clock in the evening. So lots of complaints on that one, but I think we're starting to see an awful lot of models like this. We've gone off subject a little bit, but still on subject, but off subject, right? We're very much into the car leasing space now.
Indeed. I see a lot of correlation between the insurance industry and pay-per-use, because they also measure this behavior, because they also try to limit risk. It's on the other side of that usage in a way than this balance sheet financing. But I think there's a lot of similar patterns. Do you work, by the way? I mean, you already mentioned that you expect service contracts for the equipment and things like this. Do you also work with insurance companies to cover parts of your risk?
Yeah. So we work with them, and so some things like, I mean, like for example, that machine breakdown insurance is also mandatory to have, so that just, you know, when something happens to the machine, like a forklift is driving into a bottling machine, something like that, so that this is also covered. But I think this is super like a standard model already in the market.
So there is correlation, Paul. I told you.
Which Paul?
Yeah.
You've got,
Yeah,
two Pauls there. Which Paul are you talking to?
Paul times two. Yeah, anyway, so it's always fun when we have two Pauls on the podcast. Also, not the first time. So yeah, it seems to be a lot of patterns in today's episode.
Yeah.
But good. Time flies when we're having fun is another saying that we always have on the podcast, and we're quickly running out of time. But before we round it off, was there anything that we didn't talk about today that you felt like we should have covered, Paul?
No, I think the most important aspect, we covered the process, what we do, how we see the future, how it works. I think everything is covered. I hope so. If not, we need to do a second episode.
Yeah. All right. So, other Paul, was there anything you wanted to ask that we didn't get to yet?
Absolutely not. No, I mean, like I said, I went into this completely blind. I know about IoT devices, I know about IoT data, but in the context that we've discussed today, this was an eye-opener for me. I've definitely learned something new, and I still have an awful lot of questions, but Paul, we can take that offline, maybe over a beer at some point in time, right?
Would be great, yeah.
Yeah. Yes, indeed. They do have good beer in Austria. We were just there, by the way, for the Mobi Forum, so we know.
and there we've got another chance for me to say, and I was born in Austria.
Really?
Yeah.
Where?
I was born in Vienna.
Oh, nice.
Yeah.
Awesome.
So, okay. So we have a lot of patterns now, even more.
Yeah.
All right. But with that being said, I think we're going to round it off, and continue the discussion offline, and we will definitely bring this online as well if we find a good spot to continue the discussion and hear some fantastic success stories, perhaps from Links 4. But before we do that, Paul, of course, we would like our listeners to know, how can they find out more about Links 4 and yourself, and how can they be in touch?
The easiest would be on our homepage, or on links4.io, or also obviously LinkedIn. Super happy to reach out to me. And yeah, if you don't find me, maybe Ville or Paul can assist you to guide you to me.
We will be more than happy to, of course.
Awesome.
Good. So thank you, Paul. Thank you, Paul. It's time to close this week's episode of Fintech Daydreaming. Before we go, as usual, do remember to subscribe, like, send us a review, recommend us to your friends, ask us to be in your corporate event. We do fun panel discussions and debates on stage if you want us to. So just be in touch. We would be more than happy to have a discussion on how we can get that done as well. So the usual things being said, it's time to close this episode, and this has been Fintech Daydreaming.
This is Fintech Daydreaming.